Welcome back to Trades and Gains. I'm your host, Max Pitts, and Boeing, yes, that Boeing, the one who's either taking off or barely holding altitude, is back in the news. But there's a kicker. Wall Street seems more interested in Boeing's bonds than its stock. And if you don't know what that means, don't worry because we're about to dive into the two routes you can take when investing into Boeing. So MarketWatch just dropped a piece highlighting how Boeing's bonds are flexing like a gym rat, while the stock's doing, well, whatever the opposite of flexing is. In 2024, Boeing's stock has been more like that one friend who promises to show up but flakes last minute. Now, this isn't just about market drama, it's about how investors are playing the long game with Boeing. Bonds are stable, they're less risky, and right now, Boeing's bonds are giving off trust me vibes. Meanwhile, the stock, not so much. So, where's this bond love affair coming from? Simple. When companies hit a rough patch, like multiple 737 delays, not mentioning any names here, bondholders are going to be the ones that get paid first when things go south. Stockholders, they're at the back of the buffet line hoping for scraps. So look at it this way. If Boeing was the Titanic, bondholders are the ones who are going to get the lifeboats, and stockholders, well, I hope you can swim, and it seems like most of the people in that movie couldn't. But let's not forget, though, about Boeing's debt, like $52 billion worth of it. But investors seem confident they can handle it. That's why bonds are solid, even while the stock gets shaky legs after every earnings call. So here's why this just isn't about finance nerd news that I typically give you. If you're eyeing Boeing, you've got two routes, as I mentioned earlier. You can be a stockholder, which is high risk, high reward, and volatility galore. Or you can be a bond buyer, which is steady, predictable, but you're not riding any rocket ships anytime soon. Basically, stocks are like going to Vegas, and bonds are the conservative uncle who only bets $5 at blackjack. The choice depends on your stomach for risk. If Boeing nails its production fixes and deliveries, stocks could boom like the Oppenheimer movie. But if more delays hit, bonds are where the smart money hides. Now let's peek into 2025. Boeing's finally got those 737 MAX planes out of purgatory, but whispers of supply chain hiccups still haunt the stock. And if interest rates stay high, stocks could feel the squeeze while bonds chill. Moral of the story, Boeing's bonds are like the dependable friend who pays rent on time. The stock, more like that friend who owes you $50 from last summer. So what's the move? If you like drama, volatility, and potential big swings, Boeing stock might be your jam. But if you're feeling more like Warren Buffett, boring, safe, and rich, bonds might be the ticket. Either way, keep an eye on the skies. Boeing's journey isn't over, and I promise it won't be boring. If you enjoyed this video, make sure you go ahead, leave a like, subscribe, comment, and turn on those bell notifications so you never miss another Trades and Gains video. And I will see you all in the next one.